The Intelligent Investor Full Emotional English Book Summary by Benjamin Graham. Hey buddy, let's talk about money. But more importantly, let's talk about how to think about money. You see, there's a big difference between making money fast and building wealth forever. This book, it's not a shortcut, it's a compass for your financial life. One that helps you stay calm when the whole world is panicking. Chapter 1, Who is the Intelligent Investor? Let's get one thing straight. Being intelligent doesn't mean being a genius. It doesn't mean being a math wizard or a finance expert. It simply means one thing. You control your emotions. You think long term. You stay grounded. You don't chase. You don't panic. You don't get greedy. You stay rational. That's it. That's the real intelligence. Chapter 2, Investment vs. Speculation. This world confuses two things: investment and speculation. Speculation is guessing, predicting, taking chances, buying today, selling tomorrow, hoping to hit the jackpot. Sounds exciting, right? But most people who speculate, they lose big time, because speculation is like gambling. It looks easy, but it eats your peace. Investment, on the other hand, is slow, steady, thoughtful. You study, you understand, you buy with care, and then you wait and let time do the magic. Chapter 3, Mr. Market, your emotional neighbor. Imagine this. You have a neighbor named Mr. Market. Every day, he knocks on your door and offers to buy your stocks or sell you his. But here's the thing. He's moody. He's emotional. Some days he's ecstatic. Some days he's depressed. His prices change not based on logic, but on his mood. So what do? You don't have to sell. You don't have to buy. You just smile and say, no thanks, unless the price is right. That's how you treat the stock market. You don't react to it. You use it wisely. Chapter 4, Margin of Safety. Let me tell you something simple. Never invest without a cushion. Never put your money in a business unless you know there's room for error. Because mistakes will happen. Storms will come. Markets will fall. So what protects you? Margin of safety. Buy things for less than they're worth. If it's worth $100, try buying it at $70. So if something goes wrong, you still have a buffer. This isn't about being clever. It's about being safe. And safety is what separates the investor from the gambler. Chapter 5, The Defensive Investor. Not everyone wants to be active. Not everyone wants to analyze stocks. And that's okay. If you want peace, be a defensive investor. Don't try to beat the market. Just try to match it safely. Put your money in index funds. Diversify. Rebalance once a year. And then, live your life. Sleep well. No stress. It's not fancy, but it works. Chapter 6, The Enterprising Investor. But what if you love learning? You enjoy digging deep. You have time and patience. Then you can become an enterprising investor. This path is harder, but it has more potential. You read financial reports. You study companies. You find undervalued gems. You use logic, not tips. You rely on data, not emotions. You don't buy hype. You buy value. But even here, you always stay humble. Always stay careful. Because even the best investors make mistakes. Chapter 7, Stocks and Bonds, a Balancing Act. Don't put all your eggs in one basket. Yes, stocks give higher returns. But they're volatile. Bonds, they're steady, reliable, but lower in return. So mix it. Find a balance. Maybe 60% stocks, 40% bonds. Or 70/30. Adjust it based on your age, your goals, your tolerance. Balance gives you strength and peace. Chapter 8, Know what you own. Don't buy a stock just because someone told you to. Don't buy it just because it's going up. Know the business. Understand what it sells, how it makes money, who runs it. Because when you know what you own, you won't panic when prices fall. You'll hold with confidence, because you know the value is real. Chapter 9, Beating the Crowd. Everyone wants to be rich quick, so they follow the crowd. They jump into hot stocks. They chase trends. They time the market. But not you. You do the opposite. When the crowd buys, you wait. When the crowd sells, you look for opportunity. You think long term. You're not here to win today. You're here to win for life. Chapter 10, The Power of Patience. This one's the hardest, because it's boring, waiting, holding, trusting the process. But here's a secret. The market is a device that transfers money from the impatient to the patient. Compounding works slowly, then suddenly, but only if you let it. Chapter 11, Fear, Greed, and You. These two, fear and greed, they're inside all of us. Fear makes us sell too early. Greed makes us buy too late. They whisper lies. They cloud our vision. But the intelligent investor learns to listen to logic, not emotions. You must know the truth. You are your biggest risk and your biggest strength. Chapter 12, How to Start Today. You don't need millions. You don't need to be perfect. You just need to begin. Step 1, save, even if it's small, every month. Step 2, learn, read, think, understand. Step 3, invest wisely, either in broad index funds or good businesses. Step 4, stay consistent. Ignore the noise, ignore the panic, ignore the hype. Focus, stay steady, stay kind to your future self. Final thoughts: what it really means to be intelligent. Being an intelligent investor is not about IQ, it's about EQ, emotional intelligence. It's about staying calm when others lose their minds. It's about thinking before acting. And it's about understanding that money is just a tool to build freedom, not stress. So slow down, think clear, trust time, and remember, you're not in a race. You are in a journey, one step, one choice, one investment at a time. And in the end, you'll have more than wealth. You'll have wisdom, peace, and pride, because you didn't just make money. You became an intelligent investor.